All right. Good morning, everybody. So the day we've been waiting for all week, NVDA earnings tonight. It's one of the goals in the morning briefing is to try to identify what kind of day today will be, right? And when I started doing these briefings, my goal was not really to give you my take on the day. You end up with that as a part of what we do, but the goal here is to get you to the point where you recognize a repeatable opportunity in the morning, a way to approach the day, to figure out what the market's supposed to do today, stay sideways, break out and run, so that you can go into the day better prepared, right? This whole stream is nothing more than an educational exercise to teach you how to prepare for the trading day. I've got blog posts on this. I've done videos on this, and I've been doing it every day for years. The same steps, the same process every day. Now, you have to be willing to adjust it. I use futures and I do it at 7:30 because, well, I've got things to do before the bell. Depending on what you trade, you're going to want to swap some of the things that you look at. I use the ES futures. Maybe you don't even trade futures. You'll want to use QQQ or SPY, something that's moving in the pre-market because the SPX isn't going to get it for you. So be flexible in the products you're willing to utilize to fit your needs. But keep in mind, the goal is, what's the market supposed to do today? Go sideways, break out and run. And if it breaks out, where are we going? Now, I don't get it right all the time. Nobody does. But you should be able to consistently approach this so that when the bell rings, you're not left wondering, gee, I wonder what's going to happen today. Or at 11 o'clock, you don't look back and say, wow, I got my butt kicked. I wish I'd have known it was going to be a sideways day today. How could you not have known it was going to be a sideways day today? Right? If you look left and we're still inside of our own Globex range, then we haven't gone anywhere. Right? If we're still inside yesterday's range, we haven't gone anywhere. Surprise, it's going to be a sideways day unless that changes. So sure, I know a lot of you watch this because you just want to have an idea of what's going to happen today. And I'm going to give you my take because it's what we do every day. But that's not my goal, right? So on these days where it's really easy, and it has been really easy, Monday and Tuesday were, just simple little layups, sideways waiting on NVIDIA. Not much of a surprise, right? Wasn't hard to figure out. You could have monetized that a lot of different ways. Options are the best thing to use on a sideways market because you can sell to open and you don't need price to go anywhere, and you can still make a lot of money. So hopefully, you got your mortgage payment done with a couple of those. But now we're here. It's today. At the close today, we're going to get NVIDIA. And the question today is the same one that I raised yesterday. What if the market gets tired of waiting and decides to expand in front of NVIDIA? If that happens, we will break the range violently, very likely, due to the low volume and the current low volatility. So be careful of that, right? I'm going to trade reversals if we get to the edges because I'm expecting it to be a sideways day. So I'll take the loss if I trade the reversal and the breakout continues. It'll be a small loss. Those are LRE trades, low risk entries. And we just trade the other side and then take it on the run. The base case is we don't get the run, that we're going to just come right back in again. So if you don't want to trade the range and if you're not trading options, find something that is moving. Commodities, equities, stocks are doing really good. There's a lot of stocks that are making moves. Plenty of things to trade that are not going sideways. Look at what's going on around the world. Everybody's waiting on this. the effects of NVIDIA is global. So it's going to affect every market out there. And that's exactly what we're seeing. We got Barkin today around noon. Really, I don't expect anything that he says to move the market. We do have to worry about the president. He's been vocal the last few days. I don't think he's done yet. It's very likely he's going to come in chipping his teeth again this afternoon. So be mindful of that. That could actually be the catalyst that gets us moving before the NVIDIA headlines. We got auctions in the front end, and because it's Wednesday, we have crude today. Every Wednesday, 10:30, unless it's a short week. Speaking of short weeks, next week is a short week, right? We're going to have a 3-day weekend, and then we're going to have a short week next week. So that'll mess with crude oil inventories next week. What, did I butcher his name? It happens. I butcher everybody's name. We were talking last week about a job I had as a kid narrating books to tape for blind and handicapped children. We had to spend so much time in thesauruses and dictionaries and worrying about the pronunciation of things, and names were always the one that caused me to go back and have to edit tapes over and over and over again. I don't miss that. Continue to see pot stocks in the gap up list in the morning, and take Tilray for an example. I know it's not, none of those pot stocks are very good, and Tilray is pretty low on the list of them. But if you go in and look at the options that are being traded, it's for January. So they're not necessarily in the front end. But man, those pot stocks continue to get more and more and more flows. It's subtle. They're just building positions, nice and quiet. They're not trying to move anything yet. But you can see that their outlook is like next quarter, maybe even next year. It's not something right now. And that's the idea, right? They want to get in before legislation is announced, before it starts getting into the headlines, because once it does, everybody else is going to pile in, and it's just going to push their position higher. The put wall dropped back down. So that was just a 1-day wonder yesterday. We're back above the volatility trigger and the zero gamma. We got call wall resistance overhead 65.15. And we still have that range that we measured out since Friday, right? We tested 64.30 this week perfectly. That was back here. And we've just been holding above it since then. But that did define this as a lower high. Now that we've set this level here at 64.30, that defined a higher low, right? So we had the high, a higher low, lower high. So we need to see what happens next. We don't want to break this 64.30 before we've run up and at least broke this high that we put in, and hopefully do better than that, get above 6,500 and come up and test this previous high. But we don't want to go back down here. That'd be a bad deal. So stay above that half back of Friday for today. Now, I say for today, but once we get to NVIDIA's earnings, that's going to be the dominant piece, right? I was digging around looking at CapEx for all the other Mag 7, right? Because that's really what drove this a few years back when Google was spending billions, and Amazon and Apple and Microsoft, everybody was buying NVIDIA's chips and they were spending billions. Well, then they started backing that off, and a couple of them started making their own chips. So then you have NVIDIA's hands tied behind its back on what it can sell to China, how much of it can be sold to China, and then China coming out trying to block companies in China from buying NVIDIA chips, saying we don't need it, you don't want it, there's backdoors in it, really putting doubt into it. But make no mistake about it, they're still selling chips like crazy, and there is still a massive demand. Some of the concerns when it comes to their earnings is production issues, right? They had issues before, and then what they're going to announce for new chips. Those are my two concerns. Anyways, we'll see what comes out of it. And remember, the bar is set really high. They can't just meet expectations. That's not going to cut it. They're going to have to exceed expectations. And right now, the biggest worry is that they won't deliver a big enough win. We're also at the end of the seasonality run, and we're supposed to go sideways or down from here. Although money flows are still showing that we're still crazy bullish in the money flows. A lot of divergent data out there between, what we should be seeing and what we continue to get. And I would say always play what you've got, not what you think you should have. 42,000, the volume's lighter today than it has been at any other point this week. It is light, but with NVIDIA in front of us, it's not a surprise that it's light. We would be concerned if we saw that 42 and we didn't have NVIDIA today. We'd be wondering, what are they sitting out for? What's going on? Then we had the very narrow IB last night. Now, IB is initial balance. It's basically the open range, only it is set at a specific time frame. So 1 hour in the overnight, we had a really tight range right into the kill zone with a real small move and then right back into the zone again. And that's what we've done all night. This is a wild, tight range. I can't believe when I got up this morning and I seen that, I was really surprised at how tight that range was. I find it real unlikely that we're going to hold this range into 4 o'clock today. Technically, it's possible, right? I'd never want to be somebody who suggests that price can't do something, because I've learned over the years price can do whatever the heck it wants. It doesn't ask my permission, that's for sure. In that vein, we could stay here all day. It is technically possible that we just sit there, but it's really unlikely. So what's more likely is we utilize all of the Globex range, and that would be this. Even that is a little tighter than I would expect the markets to be able to handle. That's like 11 points. We've had 11-point days. Back before COVID hit, an 11-point day was like the norm. It was really hard to get points back in the day, which is why you always used a lot more contracts, right? You had to get real comfortable trading when your average daily range was 8 to 12 points. Trying to get, 2 points out of the whole day could get a little tricky. So we'd use multiple contracts. That way, when you did finally get a 2.5, 3-point move, you did it, with a size that actually got the bills paid. It's possible we sit in this 11-point range. It's more likely that we break it. I'd like to say that we stay inside the range of yesterday and of Monday and Friday, but that would be bearish, because we would have to go down to stay inside that range. And I'm not really feeling the bearish bias here. So watch for a breakout of the range, the first range being this Globex 11-point zone. If it's to the downside, no problem. We've got the 3 period, the 10, the 20, we got yesterday's halfback, right? We got plenty of levels to the downside to play on. To the upside, 64.92, Friday's high, and then last week's high. Just like that, we're going to get right into those levels, right? 6,500, 65.11 cog line, 65.15 call wall. and it won't take NVIDIA to do it, right? We're talking about intraday today. If we break out of this zone and start to run ahead of the earnings, we are basically flat. So there's no edge here between one ADR and the next. The only thing that gives us any bias to the downside is that the lower ADR is inside of yesterday's trading range. So we won't need an inside day breakout to get there. All we have to do is break our own Globex range, and we can begin this drive to the downside. Measure yesterday's range. And the halfback is 64.60, basically. That's all of yesterday, and we want also just the RTH. So when we do that, 64.66 is halfback of the RTH, and 64.60 is the halfback of the whole thing. If we can cut through those, then we can get to the ADR half. Then we can work on yesterday's low itself, the RTH low, and then the full low, and then the full ADR to the downside. So you can see the levels, they're not exactly equidistant, but they're lined out pretty good, step by step by step. That would get us to the downside. Do the same thing the other way around with, say, a 111, 1236 on the upside, and Sunday's high. Really don't even need that one. Friday's high. Monday's Globex low. That one doesn't help either. We'll get rid of that. Get rid of that. That works. And there's our levels to the upside. 64.92 cog line. Friday's high 64.96. You got the roundy in there. I didn't mark that. 65.11, 65.20. So we've got levels. If we break out or break down, no matter which direction we go, we're good. We're lined up really nice. If we actually get anywhere, and that is the caveat we keep coming back to. What's the driver that actually gets us going, right? And I don't have an answer for that. There could be leaked information, right? Somebody could leak something about NVIDIA. There could be some kind of chip news. The president could say something about chips. Anything like that could get us going, break us out of the zone. With what's going on with, Ukraine and Russia and threats on Russia with tariffs, commodities. We got oil today. Oil could tie into the whole Russia-Ukraine thing. That could give us some kind of break today and get us moving. Something that diverts our attention from the video that could get us going, right? Dollar yields. Seen that big move in dollar last Friday. We could, revisit that. Mortgage names like Open are getting a lot of attention. Rocket, Redfin, those guys. So 30-year, maybe 20-year. There's things that can break this zone, right? If the market looks away from NVIDIA for just 30 seconds, we can get out of this zone. That would do it. Yeah, if the US makes some comment about taking a stake in NVIDIA, anything like that could get us going. And it doesn't have to actually be true, right? It could just be a hypothetical or a what if or a, hey, we're thinking about, and then boom, that's all it would take, right? So don't get stuck in this complacency that it's been 2 days of sideways. It'll just be another day of sideways. Markets get bored and do silly stuff. We've seen it before. We're going to see it again. I don't know if it's going to happen today. Nobody does, right? But be prepared for that. If the range breaks, it's likely going to be a doozy. And markets are just like anything else in nature. The more you compress it, the more it wants to explode. Oh, yeah. Idle hands of the devil, right? For sure. If I get bored, I'm going to start, clicking buttons and doing things I shouldn't be doing. That's why I stay busy all the time. Today's floor pivot is basically the same spot as yesterday's floor pivot, but the channel has widened considerably. We tested that channel top. So far, we have an MDP. That's a missed daily pivot. It won't count, though, until tomorrow when we look back and say, hey, we never hit that pivot. But for today, it's just on the table. If we break the channel top, we're going to go to that floor pivot. Then we'll try the channel bottom. Then we'll work on the weekly pivot, which is down below the 64.50 line in the sand. With these narrow days, it's worth looking at the S&R lines. They're going to be really tight, and this won't help if we start to break out and run because they're just so close to us. 65.06 is R1, and nearly perfect 64.50 is S1, right, which is just above that weekly floor pivot. That puts a lot of structure around that 64.50. It's a big options level. It's the weekly pivot. It's S1. 64.50 is a strong structural level at this point. If that breaks before NVIDIA's earnings, I'd be really surprised. If we do break it, though, Tuesday's low is basically 64.32 cog line, and it's the weekly floor pivot channel low. So we have another level of support down there. I don't really like to call it support, but got another structure down there. This shallow area continues this week. Can't really tell yet because we don't have the other side, right? If there was a distribution here as well, then we would be able to see that shallow area. But, use your imagination a little bit, draw outside the lines. We got that shallow area continues this week, even though that's where we turned around this week, right? That 32 cog line held and we went back up from there, but they didn't put in any work down here at all, right? They were tiptoeing in the sand on that one. No footprints left behind. 3 layers of points of control up here. That 60, anything above 64.60 has been defended well. It's very interesting to see what happens next, right? Because we're above those at this point. We're kind of flirting with this one from 2 weeks ago. But these other two are lined up a lot closer together. And right now, with them being underneath us, if that breaks, we'll get to answer this question about the liquidity down here or the lack of. I think we'll get another chance and see if they get to build it out or not. $10-day, 30-minute volume profile in TPO. The TPO is almost a classic P shape, but the volume profile is still kind of rough because of this drop last week and all of this. That's what built us out here. And we're not going to get to that for at least a week. So the point of the profile isn't going to adapt or change, but it's really narrow and it's really concentrated right now. This is a 70-point value area. And that also isn't going to change anytime soon. So what we have is what we're going to get. As long as we're in this cradle, we can cross back and forth there a lot, right? This isn't going to act as a support or resistance line. We're just going back and forth through it, almost like a gravity zone. The concern is once we leave the range and then we try to come back into it, then it'll begin to behave more like a support or a resistance. So if we broke the top of the range and left and then came back, it would likely act as support. Or if we broke the range to the downside and we came back into it, it may act as a resistance. We expanded quite a bit away from it, more than reciprocation, and we still ran right through it like it wasn't there. But this profile isn't likely to change anytime soon, and at the moment, it's not a classic P shape, although the TPO is really close. We broke through that 6470 VPOC yesterday, so we're done with it, but we put a new one in today from Tuesday. So we'll just line that up. I don't get it to the tick. If that's what you want to do, go ahead. I just use the round number. So 55 looks good. I think if I try 56, I'll just end up on the other side of it. And I'm only marking this point of control because we have not hit it yet. Now, the textbooks will tell you to mark it every day anyways, right? Whether we've hit it or not. The value area high, the value area low, and the point of control, you should project them into today's trading so that if we come across those levels again, you'll have an expectation of elevated trading activity. I've got enough pivots. I don't need the extras. So I'm only going to mark out the one that hasn't been hit, VPOC. The distribution today between the TPO and the volume profile for our Globex trading in the overnight, they're nearly in sync. We're a little shallow on the TPO in this lower distribution, but otherwise things look fine here. No real surprise. Nothing stands out. And if there was anything that got my attention on that, it would be the lack of participation on that reversal. Same as back here 2 nights ago, right? Not last night, but the night before, when we had that reversal off the lows, and there was a real lack of participation on that reversal too. Same thing on the reversals off the high. There really just wasn't there. There's a difference, right? And it comes to how price reverses off of a level. Was there a lot of sellers up here slamming it to the downside, which would have shown up with a significant volume level? Or did it just fizzle out and there just wasn't any buyers anymore and it faded back the other direction? And that wouldn't leave a footprint behind, right? You kind of get the idea. So how we turn is important, and we can see how we turned within that volume profile and TPO and put the two together. So there was a lack of sellers down here, and there wasn't strong buyers here, which is why we didn't get a big footprint here. If we had a bunch of buyers step in and defend that low, we would have had a bigger footprint with the reversal. Aha, right? Lights turn on. Friday morning in the morning briefing, I had mentioned how next week, which is the week we're in now, it was very likely we wouldn't do nothing into Wednesday's earnings on NVIDIA. This gray line is Friday's close, and we are right there right now, 3 days later, right? 5 days if you want to count the days over the weekend. This isn't, me saying I told you. It's the idea that that's what we want to do, right? Put all the pieces together, come out with a thesis, and then keep reevaluating things as they update to see if the thesis is still correct. So far, it's still correct, right? We haven't done anything. And when we've tried to go anywhere, we just came right back to the line, still just waiting on NVIDIA. I'm a big believer in reciprocation. What we get on one side, we generally get on the other side. If you wanted to do that on just a hypothetical what if, If we had that much of a move in one direction, what happens if we get that much of a move in the other direction? Let's actually set it on Friday's close, though. 65.11 and 65.38. This is measuring, 100% of the move to the downside with 100% of the move to the upside. 65.38. That would be reciprocation, right? Think of a jigsaw that you run. It's just making the same distance in each direction. So if we break out and run today, 65.40, basically, as an upside target would give us the opposite of what we had to the downside this week before NVIDIA's earnings. We could do that before NVIDIA's earnings too, right? It's the other side of the reciprocation. We are still more than 2% above the 10-week. We're fine. And if you look at the stair steps down, we're just gradually moving back towards the 10. Now, every day price moves, right? Thanks, Captain Obvious. And every day the 10-week moves. Even though, it's a weekly, we don't expect it to move it. It does. And the daily moves. So if we move down towards the 10 and the 10 is moving up towards us, then, it's that old math equation about if you're on the highway traveling 70 and the train's coming at you at 150 miles an hour and you're 300 miles apart, when do you meet? Y'all remember that math from back in the day? So we're moving and the 10 is moving. And the idea is that we're keeping that distance nicely. We're just barely inching towards it. No big extreme moves like this one back here, or worse, one that drops us into the negative, right? We've seen those big reversal bars where we just go from like +3 to -1 in a single shot. We got nothing like that. On the weekly, we're good. Trend is still intact. It's not at risk. There's nothing wrong at all with that. But that 2.25% does suggest that if things were to get nasty, we got 2.5% move to the 10 at the bare minimum. You can consider that the mean. And that we could get 2.5 on the other side of that because, well, reciprocation. So we could get a 5% move flash crash style, and it wouldn't even wake the market up. 5% is nothing at this point. We're 0.5% above the daily 10-day moving average. Everything fine here too. Nice little stair steps, no wild drastic moves. It's moving, we're moving, and yet we're maintaining this distance nicely, still by going nowhere. Everything's fine. Nothing's broken here. We're sitting in the zone. Looking at things that are down this morning, China's down, emerging markets, gold miners are down. I don't want to say precious metals because that's kind of missing the point. Junior and regular gold miners are down. And really, that's it on the downside. Kind of flip that over and look at the other side. Look at what's up this morning. UFO, again, it was funny. A number of people yesterday was like, what the heck is UFO? I know, I get it, right? You'd think they'd have come up with something better, called it space, or I don't know. UFO just doesn't inspire confidence in grown adults talking about UFO. But it's what it is. It's what it is. This is a basket of stocks. So open it up, look at the basket of names that is inside this ETF to kind of get a feel for, hey, what's moving out there? I tend to lump that one into the small caps group so that when we, bring in something like the small caps list, all of these are different ETFs that I like to keep an eye on in the small cap space, even if they're not necessarily a small cap thing, like that top 20 in the S&P. That's obviously not a small cap thing. But breaking down things like the top 20 names in the IWM by weight, or that calf ETF, cows ETF. I don't know why they're stuck on farm animals. The IPO ETF, yeah, there's an ETF called IPO, as if that isn't confusing enough. SLYG, it's a growth. And then SLYV, it's value. And then top 10 by weight. So, you can break these down and open them up, get the names out of them, monitor them, see what's moving out there, have a better feel for what's at play. Because when the Mag 7 just call timeout and quit running around, we got to find something else to do. Idle hands, right? So we see that UFO is up again today, and it's up 11% over a 5-day period. That's a pretty good move. At this point, we might be considering if it's done yet or not. Hot stocks are down. China, China, China again. Miners, or at least junior miners. Airlines, precious metals with silver, miners again. And then that's it. The rest of these are not down enough. Bonds are down, they're just not down enough. 0.5% is my benchmark. When I started today, I was talking about how you can adapt this to your style. I do the briefing really early at 7:30. So I use 0.5% as my benchmark. If you're doing this same thing on your own closer to 9:30, increase the change on the percent change, right? Use something like 1%, 1.5%. Because if we're much closer to the open, we should see a more extreme move on the things that we want to focus on. The only reason I use 0.5% is because it's so early. Looking at what's up this morning on the same idea, we don't have much, right? There's just really nothing here, and we're waiting on it. So retail getting a lot of attention, and nat gas, which I have no care about nat gas whatsoever. I don't care. And the VIX. Certainly not as low as it has been, right? Got a little bit of a move yesterday or in the overnight, but there's just nothing here. So all eyes on NVIDIA, and keep your eye out for anything that begins to expand the move. In this low volume environment with low VIX or low volatility attached with it, it does not take much to cause the market to just scramble and go. I'm going to be playing the reversals like I mentioned, because that is the base case argument, to play the edge, flip it to the other side. But if we start to run, be ready to change sides and go the other direction. Don't get stuck in that mindset that it's going to reverse or that it has to reverse and that we're going to come back in again, because we don't have to, right? Price can do whatever the heck it wants. Otherwise, let's get through NVIDIA and see what we're going to get on the other side. My track record with anticipating what direction a market's going to go for earnings is nearly perfect, right? Nearly perfect. If I think it's going to go up, it's going to go down. If I think it's going to go down, it's going to go up. So I don't even want to guess what NVIDIA is going to do for its earnings, because I get it wrong almost flawlessly, right? I'm so good at that one, I could do it in my sleep. I really think NVIDIA is going to go up, if that helps, right? That it's going to have a good earnings and it's going to go to the upside. That's my take. And I'm almost 100% perfect when it comes to that. I do. It's like Kramer, right? It's like an inverse Kramer ETF. I'm so good at getting it wrong when it comes to earnings. People should really subscribe to my earnings service just to take the other side of my trade. Like Tom Sosnoff used to say, right? If you don't like my trade, take the other side of it. Because I am just absolutely horrible at picking direction when it comes to earnings. I think NVIDIA is going to beat, and that they're going to do it handily, right? And I mean, really, that's why I never try to play earnings, because I am horrible at it. Unless I'm just doing like iron condors and, playing the mean. I'll do those, but man, direction, I'm horrible at it. So that's what you got, guys. Be careful, be safe. Don't get stuck in the bias that says we can't do it, because well, we know we can, right? And I'll see y'all tomorrow.